People often ask the question, is real estate investing better than investing in the stock market? Well, I'm going to compare the two and let you decide which one's best for you. Generally speaking, if you buy a good property, meaning the location is very good, the income producing potential is very good, then it should outperform an investment in the stock market. But keep in mind that real estate is very unique and that no two properties are ever the same. Therefore, it's considered an imperfect market. However, the stock market is more of a perfect market because mostly the same stocks and funds are available to everyone, unlike real estate properties. Now let's get into some more specifics and compare both markets. Keep in mind with real estate, it can involve more of your time and can even be a hassle at times, even if you have a management company. But with real estate, it can provide you with rental income as well as the opportunity to create more value just by you making improvements yourself. In other words, you have tangible control to increase the value of your property, and that's separate from normal home price appreciation. Then, of course, there are other benefits such as the use of leverage, meaning you control the investment with less of a cash outlay. And then there are the tax write-offs, such as depreciation, mortgage interest deductions, and capital gain deferrals. And these you don't get with the stock market. And finally, real estate is a great hedge against inflation. Just look at how properties have appreciated over recent years. Now let's talk about the stock market. For one, broad index funds have shown some consistent high gains over the years, there's no doubt. Next, unlike the upkeep of real estate properties, there's a minimum amount of effort required when owning stocks. There's not really much you have to do other than just keeping an eye on them for any important news that you may need to know about. Stocks can also create passive income through dividends, and probably one of the best features in the stock market is that it's liquid, meaning you can sell your stocks in minutes if there's ever an emergency. So as for the question, which one is better? When you compare a stock index fund such as the S&P 500 to residential rental properties, let's say over the past 20 years, the S&P has yielded an 11% return on average, whereas the residential real estate properties have yielded 11.7 over the same period of time. Now, percentage-wise, it may seem like real estate has a slight edge, but keep in mind that percentage doesn't include the tax write-offs and many other benefits I mentioned earlier. In my own opinion, well-rounded investors should have both in their long-term portfolio. If you're interested in purchasing any kind of real estate, especially income-producing properties, call us today or visit us on the web at dtomaso.com.